Good afternoon, Ms. Babsky. Good to see you. Looks like you made it all the way there, so we're good to go.
Guess I didn't.
She didn't realize
I
you gotta
didn't.
push the button to answer your question, Warren.
I am now trained. Thank you.
There you go.
Excellent. Welcome. It's nice to see you.
Test, test, 8765-4321.
Hello, anybody there?
Hello, Controller, welcome.
How are you?
Good,
Hi, this is Aaron Ford.
right.
Can you hear me?
We can, there's some noise in the background here, so it's a little difficult, but I'm sure when it quiets down, we'll be good.
Okay, thank you.
Governor, how are you?
Good morning. Sorry, everybody, I was in the, time got away from you in my previous meeting. So, we have everybody here?
We're ready to go, Governor.
You sure?
Not exactly, but that's what we're saying.
All right. All right, let's call to order the State of Nevada Executive Branch Audit Committee scheduled for today, November 2nd, 2023 at 1 p.m. Can I have the clerk please call the roll?
Lieutenant Governor Anthony. Here. Secretary Aguilar will not be here. Treasurer Conine.
Here.
Controller Matthews.
Here.
General Ford.
Here.
Ms. Babsky.
Here.
Governor Lombardo Chair.
Here.
We have a quorum, Governor.
Hey, Warren, did I hear that Francisco is here or no?
No, Governor, he is not.
Mr. Aguilar? Okay.
I heard something from General Ford he was going to try to call in.
He is.
Yeah, I'm on the phone.
He answered here.
Right.
Can you hear
Yes,
us
I'm on the
okay?
phone.
Can you hear us okay, Aaron?
Yes, Governor, I can hear you fine.
All right, perfect. And we have a new member, correct?
Correct.
Would you like to introduce yourself?
Sure, Dina Babsky. I'm representing the public on this committee. Honored to be here.
That's it?
Well, sure. I work for the city of Las Vegas. I'm the Deputy Director for Economic and Urban Development.
Awesome. Welcome.
Thank you.
And thank you for participating. All right, we have a quorum. We will close agenda item number 1, move to agenda item number 2, public comment. And as usual, everything is different depending on the board. So first, public comment is limited to comments on items on the agenda. No action may be taken upon a matter raised under public comment period unless the matter itself has been specifically included on an agenda as an action item. Please limit your comments to 3 minutes, and as a matter of protocol, I will read the phone number associated with public comment publicly, that being 775-321-6111 or 702-329-3435. Do we have any public comment there in Carson City?
No, Governor, we do not.
Do we have any here in Las Vegas? Anybody in the room? Seeing none, do we have any online or calling in? All right.
No,
We'll
Governor.
close public comment. Go ahead. Did he say no?
Yeah, right, yeah.
All right, we will close the first opportunity for public comment. Move on to agenda item number 3, approval of the July 19, 2023 minutes. Possible action.
Governor, I'd make a motion to approve. This is Zach Conan.
I'll second. Think you need one?
Did you hear that? Did the clerk hear
Yes,
the
Governor.
controller?
Yes, Governor.
All right, thank you, Aaron. All right, we have a motion. All those in favor signify by saying aye.
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 Any against signify by saying nay. Hearing none, motion passes. We will close approval of the minutes. Move to agenda item number 4, presentation of the audit reports pursuant to NRS 353A.085, information only. And we will start off with 4A, Department of Veteran Services.
Good afternoon, Governor, members of the committee. For the record, Marty Schaefer, Executive Branch Auditor. Representing the Department of Veteran Services from Las Vegas, our Director Fred Wagger and Chief Financial Officer Joe Thiele. Also attending in Las Vegas are representatives from Avalon Healthcare Group. The audit focused on improving transparency in operations between the department and the management company of the Northern Nevada State Veterans Home. Going into the audit, the department had yet to receive a distribution of cash from the management company's corporate parent as envisioned in the contract for management services. The first eligible 6-month cycle for a distribution ended back in June of 2020. We're pleased to report that the department just received a distribution of over $967,000 this past August. The distribution calculation reflected corrections of certain issues that were noted as part of the audit. The audit found that several aspects throughout the current state of operations called for revision. We've made 5 recommendations. First, we recommend the department take the steps necessary to ensure they are able to independently validate the financial data resulting from North Home operations. The information made available to the department throughout the life of the contract has been limited to summary reports prepared by the management company. The department has not been given access to the supporting documents necessary to corroborate and reconcile the information presented to them. Reliance on the summary information prepared by the management company has led to various financial misunderstandings between the parties. Most notably, the department has been unable to validate the lack of funds available for distribution through the end of 2022. Based on the cash balance and reserve requirement presented by the management company, there was never a balance of cash available for distribution to the state. The audit noted financial discrepancies in several areas, including multiple instances in which the management company directed the department to remit more funds to the North Home bank account than what was owed. The bank account is left under the full control of the management company, which has allowed the corporate parent to deposit and withdraw funds without the knowledge or approval of department representatives. In addition to funds for the fee owed to them by the state, the corporate parent withdrew over $4 million through the end of March 2023 for what they claim to be expense reimbursements. According to their representation, the corporate parent charges a portion of certain corporate level expenses to each skilled nursing facility under their management. The audit was unable to determine that sufficient records are generated to support these reimbursements. Upon obtaining and reviewing the bank statements that were originally withheld from the department, we were unable to find a correlation between bank transfers and known or represented amounts due to the corporate parent. The restrictions on data made available to the department is non-compliant with the contract, which states that the department is to have unlimited access to financial information. Our second recommendation is to link the management fee to services performed. There is limited information available to evaluate the cost to the state of paying the corporate parent the management fee. The contract is structured so that the state owes the corporate parent 5% of gross revenue generated by the North Home each month. The understanding is that the management services covered by the fee are performed by corporate or regional personnel that allocate time among multiple facilities. The corporate parent claims that they do not track the time or effort spent on a particular facility. As such, there is no documented data of actual service provided to the North Home. Basing the fee solely on North Home revenue has provided no clear correlation between services received and the fee owed. The North Home generates revenue from charges to his residents, which include the cost of the room and various medical expenses. The corporate parent is automatically owed 5% of those charges. There is no indication that the need for management oversight services increases in conjunction with the charges incurred by residents. This effectively means that the corporate parent earns higher fees without a corresponding need to provide additional service. We felt it was important to emphasize that the 5% fee owed to the corporate parent does not take all other North Home expenses into account. After accounting for total expenses, the state paid the corporate parent approximately 96% of North Home net income through the end of 2022. Our third recommendation is to revise the calculation of the reserve requirement by implementing one of 2 options. The first option is to revise the reserve to reflect the true cash needed for operations. The contract allows the management company to retain funds equal to 35 days of cash needed for operations, with any excess funds reverting to the state. Each June and December, the management company has presented the department with a summary of cash available against the reserve requirement, all of which have shown there is no cash available for distribution to the state. The management company has been inflating the reserve by misrepresenting non-cash income statement adjustments as cash used in operations. The inclusion of these adjustments increases the funds retained in the reserve, which then decreases funds available for distribution to the state. The other option is to use 1 month per diem as the reserve requirement. The state initially intended for the reserve to equal 1 month per diem, but the corporate parent requested the reserve instead equal 35 days of cash for operating expenses. The corporate parent argued that costs would be too high in the first 1 to 2 years of operations, and that the short-term nature of the contract left them at higher risk. Operations have now surpassed 5 years, and the original contract was amended from 2 years to 6 years, making the corporate parent's rationale for the change outdated and no longer applicable. Using 1 month per diem as the reserve would provide a more precise calculation and limit the ambiguity involved in basing the reserve on expenses. Our fourth recommendation is to present the North Home financial statements on the state's fiscal year basis. The management company currently presents the financial statements on a calendar year basis. This conflicts with the transactions reflected in the state's accounting system, which are recorded in accordance with the state's July 1st to June 30th fiscal year. The conflicting recording periods complicate the ability to reconcile and assess year-end data recorded on either of the two sources. In order to determine whether discrepancies exist, one source must be manually converted to align with the other source, which can be a cumbersome process and can lead to inaccurate reconciliations. The determination to present the financial statements for a calendar year was a unilateral decision on the part of the corporate parent in drafting their limited liability company operating agreement of the management company. The state was not a party to that operating agreement. Our fifth recommendation is to take the steps necessary to improve oversight of the management contract. An inspection of the North Home by the Centers for Medicare and Medicaid Services in April 2022 found 37 health citations, resulting in a 1-star health inspection rating. 37 citations for a nursing home was substantially higher than both the Nevada average of 13.5 and the United States average of 8.7. The health inspection resulted in an overall 2-star rating for the North Home. The contract for management services made clear that the objective of the state was to attain and maintain a 5-star rating. The corporate parent represented that they were qualified to meet this objective. A follow-up Medicaid inspection performed in July 2022 found that the deficiencies had been corrected. However, an inspection performed by the Department of Veteran Affairs approximately 6 months later found that the North Home was out of compliance with the federal requirements for state veterans homes. There were 8 findings resulting from this inspection, indicating that corrective actions taken by the management company were not implemented for long-term solutions. The results show that there is substantial work to be done by both the management company and the department to meet the expectations of a 5-star facility for veterans care. We would like to thank the Department of Veteran Services management and staff for their time and effort throughout the audit. We would be happy to answer any questions the committee may have at this time.
Dina Babsky for the record. You mentioned the 5-star rating. Is that an aspirational goal in the agreement, or is that a hard performance metric that's required?
Warren Lohman for the record. That is the notation in the contract to attain and maintain a 5-star rating as the goal.
Is there, Governor Lombardo, for the record, is there any financial payments or contract obligations as a result of the five-star rating versus the one-star rating?
For the record, Warren Lohman, not that we saw, Governor, perhaps the director or Mr. Thiele can add some fidelity to that.
Director Wager, for the record, there has been no final or financial obligation based on the star rating.
So-
Conan, have they ever achieved a 5-star rating?
Director Wager, for the record. Director Wager, for the record, not at this time. I did want to address that 5-star rating. There were 3 areas. One was a 5-star, one was a 4, and one was a 1. CMS rule says if you get a 1, the highest rating you can get for that period is a 2-star. That's why it's a 2-star and not an average of those 3 numbers.
So any 1 star automatically triggers
Correct.
a ceiling of 2. Got it.
Governor, I've got a few questions, if that's all right.
Go ahead, Zach.
All right, thank you. When does the contract expire?
August 24, I believe it is. It's August or October. Sorry, I'm getting confused.
That's Joe Thiele, for the record.
Sorry.
Thank you. What are the termination provisions under the contract? What gives us the right to terminate and under what sort of?
I'm trying to remember the period. No, I'm sorry, Joe Thiele, for the record, I wasn't prepared for that question on the contract. It's the standard contract language. It's used by the state, and I believe it's at least 90 days, but I have to check on that and get back to you.
Well, we have, Mr. Conine, we have representatives from Avalon here in the room. Can you guys, either one of you, answer that question?
I do not know this is Alan Hash, and I do not know the provision for canceling the contract with the state. So
That's a provision I haven't looked at for a while. I can get that answer back to you, though.
Treasurer Conan, for the record, this is less of a question than a comment. I think termination provisions would be the most reasonable question to expect after an audit of this magnitude. I've been on this board for 5 years. I've never seen anything like this. It's awful, gentlemen. And so what I'm trying to understand is the decision to not provide the information that the department has asked for that is required by the contract. Whose decision was it, and why'd you make it?
this is Alan Hash. I was not aware that you did not have everything you needed, and certainly we're more than happy to cooperate and have any information that you don't have provided. It's open books. We're happy to share anything that we have. Absolutely.
This is Carl Hughey, for the record. As I took over in this role, we have identified that there's been multiple things that have not been shared. And I've worked with Joe Thiele and individuals in Entity Best Department to do everything we can to share. We recognize there are things that have not been as open as we want them to be, and we are doing everything we can to correct those things. We recognize this contract's been going on for 5 years, and we are at the tail end of that contract. And so we recognize that this is all coming late in the game, but we are open book. We want to be an open book. We'd open our computers and give them everything they have access to and do it. We obviously have systems that are complex and difficult and run separately and different from what Joe Thiele runs in his department, and so they are complex and difficult to understand. But that doesn't mean we can't open them and give them to you guys and give them access to, as we are trying to do. I think, I won't speak for the department, but they recognize we are trying to share as best we can, but these systems are complex. And so it takes time and understanding on both parties to try and help have a full, complete, transparent understanding. We want to share, we want to be transparent, we want to share everything. I have no interest in not sharing information. So
Absolutely.
we will do all we can going forward, and if the termination is what is decided, we will do everything we can to transition appropriately. The veterans deserve that.
Okay. Obviously, that part's not my call, but let's focus on the audit piece. Okay. Certainly, there's plenty of people at the state who can help go through a spreadsheet if you need the help. to do that. Appreciate that you're willing to share all the information. When you went back through the process and that almost $1 million payment just sort of randomly showed up as we started asking questions, or at least that's how it appears to us from the cheat sheets, did that calculation go back and look at all previous quarters to see whether or not payments should have been made? Was that the sum total of multiple quarters, or was that just to look back at that quarter?
Carl Hughey for Avalon Healthcare, if I may. That calculation was actually a standard in-time calculation. That calculation did not occur because of the audit. That calculation is what happened because of the operation for the facility and what had happened with or without the audit. There were adjustments to that calculation based on audit findings that helped clarify some of the questions the audit brought forward, as if what was cash-based expenses and not cash-based expenses. And so the calculation of what a 35-day cash on hand calculation was adjusted the value of that $900,000 that was brought forward, but that $900,000 would have come forward with or without the audit. It's just adjusted it by $40,000 or $50,000, and that was all. That would have come either way. And we've actually made adjustments to that based on the audit recommendations, and we are already preparing to make adjustments to the next calculation that is due in December, with payment out first part of next year to change that calculation as is recommended. We're working to change based on these recommendations to improve and make the appropriate changes for improvement in the contract. So no, I don't think it was because of the contract. And when we look back at what we had done, there were some things in this audit that said, you know, if we had done some things differently, would that change? Would we, if we went back and made the adjustments to the calculations prior months, would it change what they got? The money is sitting in a cash account that is theirs, and that money is always theirs. And so based on the fact if we would go back and make that same calculation, the money would have, is still in the account and it has already been given back to them now. If I do the calculation from 6 months, a year ago, that money's calculation would be on the same money that I've already given them. And so it wouldn't do us any good to recalculate it, if that makes sense.
It's still all your money. The money,
Still
the
their money.
money's still
Understood.
separate from Avalon, yeah. It's not Avalon's money, it's the state's money, right?
Yeah.
Backing up to the allocated expenses, if I'm understanding correctly, the corporate parent allocates expenses to locations. Is it just you take the total number of corporate allocations you've got, divide it by the number of locations, and that's the cost per location?
Carl Hughey for Avalon, if I may. It depends on the allocation. There are multiple types of allocations in there. Some are divided up based on the patient level. Some are divided up based on the employee level. Some are divided up based on patient days. Some are divided up based on utilization in the facility. There are multiple expenses that are divided up by multiple different expense levels. And that's why it's a calculation that are being held in different management systems. Some are insurances for the employees. Some are insurances for the facility itself. So example, the example that's used is the property insurance. When you go out and buy property insurance, if you insure multiple sites, you generally get a cost discount. If you go out and insure one site, you pay more. And so as Avalon insures multiple sites, they get a cost break on those multiple sites. And then the insurer will give us the breakdown to say, this site is this percentage of that, this site is this percentage. So that site's percentage is then available for that building. And we can break that up definitively. Workers' comp's a little bit different.
Sure. Okay.
That's how.
So let me direct this question then to the agency or to internal audit. Do we feel like we have the transparency to know that, say, the property tax piece that is allocated to us is based on the property tax bill that they are receiving at the parent level?
For the record, Warren Lohman, from an audit perspective, no. Our request to get the backup for all of those allocations wasn't fulfilled, and we can't guarantee that what the claim is in fact what it was. So no is the answer.
So gentlemen, in God we trust, everybody else brings data, right? So we're going to need to see that. And until we do, I don't think that, I just want to speak for myself, I will not be comfortable that the allocations are in fact the correct allocations, just given the history of what we're looking at here, right? I understand we're late in the game. I understand, sir, you weren't here, and I appreciate your opportunity and your interest in fixing it, but you know, we're not in the trust place yet, if that's okay. Okay. Governor, I'll stop because I'm sure other people have questions, but I might come back. Thank you.
I just got a quick follow-up question, if I may, Governor.
Sure, just prior to that, hold on.
Yeah.
So Mr. Conine, for the record, is Governor Lombardo. The question was the termination of the contract, and, you know, and looking through the recommendations of the audit committee, is the August 13, 2024, is that an accurate date?
Carl,
Mr. Wager?
Director Wager, for the record, if you're talking about the 6 recommendations,
Yeah, no, it says in the 6 recommendations,
Yes.
it's listed in multiple of them. It says the contract is set to end on August 13, 2024.
Joe Thiele, NDVS for the record. Yes, Governor, that is correct. Forgot I had put that in there in our response. So thank you for bringing that to attention. It is August 13th.
Okay, Mr. Matt.
Andy Matthews for the record. And Mr. Hubie, you acknowledged in response to one of the treasurer's question, just the lack of transparency and information wasn't being shared. I'm just wondering if you can elaborate on that at all, to what extent you've been able to identify where the problem points were, what steps specifically you might be able to take to remedy that, just so we can have confidence and assurances that the problem's been accurately identified and this is going to get addressed going forward. Thank you.
Carl Hughey with Avalon for the record. What we've identified, and we've identified this over the course of months with the help of the auditors as well as completely and NDVS, the financial documents that have been provided to NDVS for the course of the contract has been summary documents. And those summary documents were basically numbers on a PDF form that had no basis behind
Context.
There was no context. They were numbers. And so Joe and the financial team for NDVS did not have the ability to look into what those numbers represented. And so we've identified that they did not have the access to be able to drill into those numbers to see what they needed. And so as a team, we've been looking at and giving them access to multiple records. Some of those records are healthcare records, which we are starting to give them access to. We haven't gotten into that piece yet. But some of those records are procurement records and invoice tracking systems that are the tracking systems for invoices that are utilized and used to pay those invoices, bank statements that they didn't have access to, our checkbook tracking software that we were trying to get them access to. They have a tracking system for their access for the computers. They can see exactly what transactions are being handled and managed. These are all things that they didn't have any access to. And then we take all that stuff and it's all compiled into these reports. So now I'm trying to give them better access to the reports so they can actually now see in a computer system where those lines are being created so they can take the software summary, PDF summary, see those lines, break them down into all the subsets and understand where all that information comes from. They didn't have all that. And so as we looked at this and better understood what it is they were looking for, we identified they're just getting the summary sheet. They don't have all the access to all the details. It was never shared. It was never identified they needed all that stuff. And quite frankly, we aren't in the practice of sharing that information with another entity. And so we've had to break down some barriers and able to fix that.
And it sounds, thank you for that. It sounds also like there were some requests for information that were not met, and which is sort of a separate type of problem. And I'm wondering to what extent you've been able to identify what may have been going on there.
From my standpoint, and this is the chief executive, and so I'm going to say a few things here that he may yell at me about later.
No, I won't actually.
But
This needs to be open.
I'm an operation, and so I work with the operational side of the facility, and so I go in and I deal with the day-to-day operations, managing staff, managing labor hours, managing revenue, and patients coming in. The financial side is a secondary component of the system. And so long-term care operations deals with the theoretical operation of the facility. I anticipate receiving revenue. I anticipate paying bills. I anticipate the expenses. I don't actually collect the cash. I don't actually spend the money. But I get every month a sheet, much like Joe was seeing, of my anticipated revenue, my anticipated expense, and my anticipated nets. I don't see the payments on the other side. So from my standpoint, I saw this and that's how I operated. The financial side, which is Joe's aspects, was a separate part of the company that I work with. They manage all the cash revenues, the cash comes, collections of the expenses. That's the management side. This side was the one that wasn't sharing the information as much as I wanted. So when the requests were coming to me saying, hey, we need this information, I was sharing on my side the breakdowns of the operational reports. It wasn't the cash flows. And so I think that was part of the problem, was the operational side was sharing operational pieces. We weren't sharing the cash pieces. And so when it became, why aren't we seeing 35-day holdback? Why aren't we seeing cash coming out? Those two are not the same. And that's an industry separation that is different than most business operations and governmental operations, to be honest with you. And so it didn't make sense. So me and Joe weren't talking the same language. And so then I had to get Joe in with my financial side. And quite frankly, my finance side and Joe don't speak the same language either. And that became quite apparent. And so that was sort of the barriers that started getting in the way, and it took us some time.
And those are being
That's
taken
what
down.
we're breaking down and breaking down and breaking down. Some of it is personality, some of it is, oh, wait, we don't share that information. And those are the things that we're fighting with.
Treasurer
Thank you.
Conrad, for the record, I'm so sorry. Could you just clarify that for one quick second? The issue was that there are two sides to one company, and those sides weren't talking to each other over a period of 4.5 years. I'm just,
No,
I'm sorry,
I-
I want to make sure I'm picking up what you're putting down.
Sorry, Carl Hughey. Let me clarify that just a little bit. I'm in operations, and so the operations side works with the day-to-day operations in and outs of the facility. And so for me, we admit a patient, that patient has an anticipated payment source, and they have anticipated expenses. That patient receives that payment source, but we don't collect that payment source on day one. We don't receive the payment for that patient the day we get them and every subsequent day. We have to get billed for that patient, and sometimes we won't get paid for like 30, 60 days afterwards. We have to pay our staff to take care of that patient. We have to pay the bills for that patient. The cash flow and the operations of that patient are not consecutive at the same time. And so as I was going through that side on operations and sharing this side of information, it isn't the same information as is on the cash flow side. So that was my misunderstanding. That's why we were having some difficulties when I first started. So my information I'm sharing with Joe wasn't as immediate and as time sensitive as what he was needing on the cash flow side. That's what I was saying. That was my mistake.
Okay.
Not the institution.
Thank you. I appreciate the explanation. This is the same process that you go through in all the other states that you operate facilities, right? I mean, the operations side, the delay in payment, the cash counting versus, okay, all right. From an agency perspective, do we feel like you've got the information, the transparency that you need now in order to not have that problem?
Not as of today, Joe Thiele for the record, Department of Veteran Services. As we outlined in our response to this, up to 6 months in some cases is what we're looking at to achieve the full transparency. By the next, for October in this month, we should be able to have, with that operating statement, all the backup documents that support those numbers. And so we're making progress. No, we are not there yet.
This is Alan, let me just clarify. I think that it's not, I think there has been some miscommunication, but this one might even be one of them. But it's not that you don't have transparency at this point. It's that some of these issues that we're talking about, they're going to take 6 months, or things like the 5% management fee and changing the structure. Those are some of the longer ones.
Or your system that you're putting in place.
Or some of the, as far as bank statements, you're now receiving
Right.
those. As far as the other financial documents, the details of invoices, we're able to get those for you. I think there's an accrual question that is still out there. But you're getting, I just want to make sure that you're getting financial data.
We're getting data, not the complete package yet.
Okay.
So, and in all honesty, it's, we don't have a huge staff, and the more time it takes to dig through and have to dig down and questions come up, it causes huge delays for you, getting you your money and for us.
Yeah.
So it's refining that system, and that's supposed to start with this next operating statement and everything in the backup to it. So
Yeah, this is Alan. I think we have plans for November forward to have the transparency on any of the financial data. And if you don't get it, you can call me personally, and I'll make sure that you get the financial data. And I apologize for the misunderstandings on this. Certainly, Avalon is embarrassed by this report, thankfully, and it's something that we're taking serious. It's not how we do business, and where your books will be open. Let me just put a little color on the timing of the distribution of what has happened here on the finance side. To start up a new veterans home, it will run losses of $2 to $3 million. That's the normal course of opening and building by the time you start to get to profitability and actually have the cash flows that go with it. There was some challenges that were significant in this facility. In particular, cost reports are part of our world. We have to file cost reports, and there were cost reports that were held up, some of them well in excess of a year to get paid. So that cash wasn't available to distribute. If you look at the financials look good, but the cash had not come in to support the financials because they were still being tied up in cost reports. So that was being held up. Avalon loaned the state at no interest money during that time so that we could meet payroll, so we could meet other things that still had to be done to keep the building open, to keep the veterans fed, to keep the staff coming. So by the time we got to making money and the cash started catching up with the operations, it took time. Then COVID was a interesting time in our world, and that certainly did not help the financial operations of skilled nursing facilities. And so that was another challenging time. I'm happy to say we're past COVID, we're past those things. The cash is now caught up to the operations, and we're seeing those distributions take place. And I agree with Carl that there would have been a distribution in the flavor of the 900,000. I do think there was 40,000 that we had made in error, that there's a $10 holdback that we were not paying for non-veterans. That was a complete oversight. It was caught by the committee, and we paid it within 30 days of finding out that it was an issue. It was like $40,000 issue, and we immediately corrected it. It wasn't oversight. It wasn't something done intentionally. We are certainly open to anybody looking at the books to come in and look at what we have in the accounting of it. Not opposed to it. It's obviously a horrible report. On the findings, we're going to be working with the team to make sure that everybody is communicating and there are no more misunderstandings and we're in alignment.
Director Wager, for the record, if I may, I just want to go back and reflect a little bit that, this home opened in 2019. Of course, we all know what happened in 2020, but that's not an excuse for this. But in the meantime, they also named a new administrator who's been doing a terrific job. Vice President Hughie came in and started making some changes. I came in as a new director for Veteran Services. Joe is the new executive officer, and I feel like we're heading in the right direction. Do we have full transparency yet? We'll see with this November report for October. I think that's going to be huge. And the other thing I want to do is thank the Division of Internal Audits for doing this as requested, because we needed this, and probably should have done a while back. But it didn't happen, and I'm not going to blame anybody. It's something that should have happened, and I'm just glad this audit has been done. We've got 6 good recommendations. We've already accomplished one of them, but I think by the next time this committee sees us, you're going to see some good improvement.
Just to come back, sorry, Treasurer, were you done with your line of questioning? Were you good for now?
The meeting's only supposed to be one day, so yeah, I'm good for now.
So just to maybe tie a bow on it, again, from the agency perspective, you mentioned don't feel like we're where we need to be in terms of getting information. Do you have some degree, or what is your level of confidence that we're at least
we
on the right track?
Joe Thiele, NDVS, for the record. We're moving forward, yes, and we're excited for this next report and being able to go through and see the backup, to be able to have that comfort level where I could look you in the eye and say, yes, this is accurate. And it was very thankful for the audit. It's really helped tremendously for everybody to see where there wasn't communication. We've gone through a lot of changes on our side and personnel and staff, and the same for Avalon. And we see the problems, and we're going to fix these. It's not unfixable.
Thank you.
Any other questions from any board members?
Dina Babsky, for the record. I still want to go back to the scorecard, because we talked a lot about the financials. I'm looking here that the number of citations for the home was 37. The average for US is 8.7, and for Nevada is 13.5. So it's triple the national average, Nevada average, and quadruple the state. What's going to be done about that?
Carl Yugi for Avalon for the record. The state actually came back in April of 23 and cited 8. Eight. In April of 22, we had just terminated a administrator and we shortly terminated the DON. We now have a new DON and we have implemented a lot of new clinical systems. The survey that is cited there is a state survey. The survey that Martin cites is a VA survey. We were put back into compliance from that one in July. The VA came in October, so about 6 months later, and they found some other areas that were also out of compliance. It's very common in healthcare to go survey to survey and have things kind of bounce back and forth because of survey preferences and things like that. So we did compare surveys being a similar survey, a state survey to a state survey. So you went from 37 to 8. And so we're hopeful in this survey coming up probably in April of 2024, we're going to see another 8 to 9 in the state of Nevada.
So the most recent survey shows 8, not 37.
Not 37.
Okay.
And so we actually cut our point value from 268 down to 50, which is a decrease of about quite a huge decrease. So we've already put a lot of pieces into place to get that corrected. That was a horrendous survey, and we had a termination of a DON and a number of clinical staff members turnover. We have done a lot of things, including a lot of corporate support and oversight with myself and our regional nurse to be living in the building, either her or me, pretty much every other week for 6 months to try and help support and correct that, because that's not our desire. And it's not at all why we were here. It's not at all why we want to be here. And the veterans deserve better. And so that was a very frustrating time. So we've done a lot since that time, and I hope to see that it's going to be improving. Like Director Wagner said, because of that survey, it has put us into that 1-star area in our survey level. There are the 3 areas that they look at: is survey, staffing, and quality. So the survey, that survey just kicked us, and it's going to keep us down for a while. The second area in staffing, we are a 5-star staff facility. Third area is quality. We're a 5-star quality facility. That staffing keeps us at a 2-star level, and it will keep us at that 2-star level until I get that survey behind us by at least 3 years.
Takes 3 years.
3 years.
Yeah. So unfortunately, I'll live with that for a while. I want to get it behind us as soon as we can, but I own it. It is what we did at that time. I had to come on board 6 months before that. So I didn't quite get it corrected before yet.
Thank you.
So I apologize.
So for the record, Governor Lombardo, so 2-star versus 5-star, 1-star, whatever it may be, what regulates the federal funding? Does it have an effect on the federal funding?
No, sir.
And then what does the star rating have an effect to?
Public relations, public perception.
So not living quality,
If
the possibility of closure of the facility?
If you continue with survey scores, has that 37 tags, there is the risk of becoming a special focus facility. And then they can get into a position where surveys continue to be negative. They can go into special focused, ongoing surveys, risk of non-payment for new admissions, and then closure if that negative survey history continues.
And your contract says that you will maintain a 5-star facility?
It says we will achieve and maintain. So we will achieve and continue to work for.
And you're saying it'll take 5 years to get to that?
I don't think so.
Or 3 years?
3 years.
There's a 3-year tail
Right,
on
I
the survey.
understand. So 3 years from now, you're
3 years from
anticipating a
April 20.
5-star rating? But yet the contract expires August of next year. Do you fully intend to reapply?
Yes.
Yes?
Yeah.
Okay, with that in mind, I just want to walk through these recommendations. So Mr. Wager, you said that one of the tasks has been accomplished. Is that correct?
Number 3, Director Wagner for the record, revised reserve calculation to reflect true cash needs has been fully implemented.
That was correct, Joe Seeley for the record, and yes, that was corrected immediately upon being brought to the attention by the audit committee.
So we anticipate an answer in November of this year for validation of the veterans home financial data. Is that what you anticipate? Avalon?
We're bringing forward in, I believe it's number 2. Sorry, I have it here with me. The operating statement for number 2, the November CAT statements that include all of the operating statements for October will include a number of items to give them full transparency and access to the full financial data. It will have everything that we can give them. There will be more questions. We understand there will be more questions. We expect that will be a lot of information, a lot of stuff they haven't seen. We expect to be more questions from that, but that will be the start of everything that we can give them. And then we will be ongoingly opening all the books to help make sure that happens. Number 4, operating statement, is continuing that. Right one, that's the preliminary one. I'm on this one.
So let me walk through the recommendations.
My apologies.
Because I think each one of these documents is numbered differently. So one of the recommendations was to revise the calculation of the reserve to formula outlined in RFP.
That will be accomplished when we do our evaluation that is due to be done in December. We will do a calculation on December 31st of the cash in the hand.
It happens twice a year.
We do one in June and one in December. The one in June we revised the calculation based on the auditor's recommendation, removing a number of items that were not necessarily cash on hand. That was done. When we do it in December, we have had discussion and we will look at removing and utilizing the formula that was done in the RFP.
Okay, so it says the recommendation of the audit committee says requires an amendment of the current contract. Has that been done?
That was, Joe Thiele for the record, that was our response. We will have to amend the contract to change that particular, the contract reads how it reads today. We would have to amend the contract to change that, which timeline and you're talking about reapplying it could be as changing an RFP, putting it back out.
Okay, so then the next recommendation, it says present financial statements on a fiscal year basis. And the audit committee says is anticipated to be available the week of July of 24. But the contract expires in August of 24. So how does that benefit anybody?
Joe Thiele for the record, the financial statements on a fiscal year basis, our response was 2 months, January 2024.
That was our response.
I'm sorry?
That was our response, Governor. We're not waiting until August 24th.
Okay.
January 24th.
You anticipate you'll be able to do that?
Yes, sir.
Okay. And I know that wasn't in the RFP, but
That's
as a
fine.
matter of practice, because you already admitted there was an oversight of $90,000, correct? Or $40,000, right?
Yep.
And then last but not least, improve oversight of the management contract.
Governor, Director Wager for the record. Yes, we got to do that. And
So-
one of the ways we're going to do that is some staffing changes. We have a state officer, when we found out that that individual previously had been told, well, we're not going to do it where you're going to oversight the contract or finances, and got more into other duties as assigned. And we're bringing that back. Joe and I have discussed that at length, and bringing that state officer to actually be following this on a monthly basis and daily basis on what's being provided. And we've just got to get it. Well, we just got to get it and get it done and make sure we're doing what we're supposed to be doing to make sure we have the financials.
So is the Veteran Services going to draft the next RFP?
Joe Thiele for the record, NDVS, yes, we would, the RFP would come from us. It would be done through state purchasing.
Right. So direction provided by me that I want to be in the RFP is an annual audit. The fact that we're waiting for +1 to have an audit, and we see these type of issues, especially at a Veteran Services home facility, is unacceptable. So put a mandate of an annual audit into the RFP.
Is that, Joe Thiele for the record, sorry, Governor, are you saying an annual audit by the state audit team or an independent outside?
It's up to you. If you can't do it within your own resources,
Okay.
you obviously can hire outside within your budget constraints. And depending on how forensic it would be, is be determined upon you, so we don't have these violations.
Understood. Thank
All
you,
right.
sir.
Good, thank you.
All right, do we have any other further questions from any committee members?
Governor, just one or two more, if I may. For veterans, what's the star rating of the Southern Nevada Veterans Home?
Director Wager, for the record, it's a 5-star.
And we manage that internally at the state? It's a state
So, yeah,
managed facility as opposed to an outside managed facility, is that correct?
Oh, Director Wager, for the record, that's correct.
If I remember, none of us were here, but in 2018 or so, when we made the decision for the Northern Nevada home to be managed externally, we did so because we didn't have the bandwidth to start up a new home. Given that we're pretty successful at doing it in Southern Nevada, is that still the case?
Director Wager, for the record, the home is there in its contract, and it's, in my opinion, it's actually easier to control. I think the annual audit would be extremely helpful to make sure it continues in that direction. Running a state home with state employees can be challenging.
Joe Thiele for the record, MDVS, to follow up on that. Initially, it took, my understanding, to have the Southern Nevada State Veterans Home become general fund independent took a decade. It was a long time. There were a huge amount of problems. And quite frankly, when this opportunity came around, even though we had the former Bureau Chief of Healthcare Quality and Compliance for the state as our deputy director, we did not have the experience necessary to open up and stand up a facility like this. So we needed somebody that's done it.
Treasurer Conan, for the record, right. I guess my question is, now that that a facility has been stood up and it is an ongoing concern, is that the same calculation?
I believe, Joe Thiele for the record, and Director Wager may have an opinion, but it's really, it was said in many legislative hearings that it's really a legislative decision on how they want it operated. The model is different than the Southern home in the size and how it will actually function. They're both skilled nursing facilities, but at the size of the one in Sparks in the north, it's a lot harder to generate the revenue for profit, and we're not looking for profit, but to break even and to have enough money to put into a reserve to make the repairs that inevitably will come up. It's a newer facility, but we've seen it in the south of you've got to have the money to back it up and fix this stuff. So,
Director Wager, for the record, to Treasurer Conine, the other issue is if you're going to make that a state facility, it isn't just as a matter of the employees in the building. You also have to bring on more IT people, more HR people, more finance people. It does add another level of burden on the department. But that, like you said, that's a legislative call.
And it triggers, Joe Thiele for the record, we'd have to have much bigger space to accommodate the staff than we have at this time. We wouldn't have enough room for the staff that would be needed for the HR, for your IT, for finance to take all that on.
Treasurer Conan, for the record, we can take that offline.
We're kind of packed in.
What's that? Sorry.
I was just saying we can take that offline. To go down that rabbit hole. Thank you, Governor.
Thank you. So Mr. Lohman, as a matter of practice, we don't get a follow-up or normal practice to follow up on recommendations on audits for a 6-month period. Is that correct?
Yes, Governor, that's correct.
Is it possible for us to get the next quarter update on this particular item in the next committee meeting?
Yes, Governor.
All right, I would like an update to be provided as an informational only item in the next committee meeting to update us on the veteran services issue with the Northern Nevada Veterans Home. Okay?
Yes, Governor, will do.
All right. If there are no further questions by any committee members, we will close agenda item number 4 and move to agenda item number 6, presentation of the audit 6-month follow-up status reports pursuant to NRS 353A.090 informational. Mr. Lowe. Thank you, guys.
Thank you, Governor.
Good afternoon, Governor and members of the committee. For the record, Craig Stevenson, Audit Manager. This is the 6-month follow-up to our audit of the Department of Conservation and Natural Resources, Division of Water Resources, DIA report number 2303. The audit focused on enhancing the equitability of water assessments and cost allocations. I'm pleased to report that the division has made progress implementing the recommendations. Recommendation number 2, to develop an equitable basin cost allocation methodology consistent with accounting best practices, is fully implemented. The division adopted a quarterly basin cost allocation methodology using direct expenses as the basis for the allocation. The new methodology equitably allocates indirect costs among water basins. Recommendation number 1, to reinstate the former water assessment methodology for municipal water users, is partially implemented. The division is working with the Department of Taxation to update water assessment guidance and is soliciting feedback from counties regarding implementation of the recommended water assessment methodology. The current assessment methodology charges users a flat fee regardless of property value or water consumed. For example, a residence and a casino pay the same flat fee. The recommended assessment methodology is based on assessed property value. The division anticipates it will review feedback from the counties and work with the Department of Taxation to update the water assessment guidance letter by the end of this year. Adam Sullivan, State Engineer, is available to answer any questions the committee may have.
Thank you, Mr. Stevenson. Do we have any questions of any committee members?
No, Governor.
All right, hearing none, I have no questions myself, so we will close. Thank you for your presentation. We will close agenda item number 5 and move to agenda item number 6, presentation of annual follow-up reports pursuant to NRS 353A.045 and 2A standard 2500.A1, informational only. Will that be Ms. Ortiz?
Yes, Governor.
Go ahead, please.
Good afternoon, Governor and committee members. Beatrice Mano Ortiz, Audit Manager for the record. This is the first annual follow-up to our Department of Health and Human Services Transportation Audit, DIA report number 2203. The audit focused on improving and expanding transportation services to provide increased access to food for food-insecure households. The audit identified approximately $541 million in annual Medicaid payments resulting from health issues linked to nutrition deficiencies. We noted the primary obstacle to accessing affordable and nutritious food is transportation. Representing DHHS is Deputy Director Debbie Reynolds and agency leadership. 2 recommendations remain outstanding. DHHS is taking action to improve transportation services. They began conducting quarterly audits of non-emergency transportation services in October 2022. The audits examined Medicaid client pickup and drop-off locations, client information accuracy, and Medicaid services provided. The audit recommended DHHS analyze transportation costs to determine the actual cost of providing transportation. In the 6-month status report, the department anticipated including the study on the appropriateness of the per member per month rate as a deliverable when the non-emergency medical transportation contract terminates June 30th, 2025. DHHS reports having made efforts to expand transportation services to Nevadans and increase access to nutrient-dense fresh food in rural, frontier, and underserved communities. The Division of Public and Behavioral Health was awarded the SPINE grant, which promotes equitable and sustainable food and nutrition security. The Aging and Disability Services Division competitively subawarded funding for transportation services to community partners across Nevada. The department also updated the Nevada 211 website to reflect available transportation services. The purpose of the audit recommendation was to address food insecurity within the state and increase access to affordable and nutritious food for individuals living in food deserts and food insecure households. The department needs to make effort to expand transportation services to specifically target food insecure households. We thank DHHS for their assistance in preparing our report. Agency leadership is here to update the committee on new developments since the status report was issued and to answer any questions the committee may have.
Can we bring the committee forward and provide the developments before we ask questions?
Yes, Governor, they're prepared.
Good afternoon. My name is Debbie Reynolds. I serve as the Deputy Director for the Department of Health and Human Services. Also here with me today is Administrator Stacy Weeks with the Division of Healthcare Financing and Policy. Healthcare Financing and Policy is working with their vendor Medical Transportation Management to modify their current cost report, adding an additional cost report that provides an aggregated amount of cost per recipient. The current expiration of the non-emergency medical transportation contract is June 30th, 25, and the division is considering using the 2-year extension. The division's current actuarial contract expires December 31st, 25, and the division plans to add an actuarial sound rate setting process in its next RFP for the transportation vendor. Administrator Weeks is available to provide additional information on that contract if needed. With regard to expanding transportation services to food insecure households, our first success was updating and finalizing the food security plan. It includes recommendations to increase representation from housing sectors, tribal communities, those who experience food insecurity, and those with decision-making authority related to food insecurity. Additional recommendations include expanding client-centered options for those who have limited access to grocery stores, cooking and storage facilities, and meeting with regional transportation commissions to review bus routes and evaluate whether populations who are experiencing food insecurity or are at higher risk for food insecurity have bus access to grocery stores. Now that the plan is finalized, the next step is implementation, and I'm happy to announce that the Office of Food Security recently applied for and received approval to take on 2 AmeriCorps service members to specifically help with implementation of the goals and objectives outlined in the food security plan. The department is also developing standard language for contracts and subgrants involving transportation services to ensure a more granular collection of services by eligibility of the clients, and we'll be including a requirement in our master subgrant template requiring subrecipients to maintain current information on Nevada 211. I also have some updates on some expanding services to the youth population. The Division of Child and Family Services has funding for child welfare, youth travel, and placement prevention funds. Funding can be used to support public transportation and transporting youth to visit siblings and relatives to promote family relations. While this funding is not necessarily used for food insecurity, the division is looking into developing a policy that as they work with families who appear to have food insecurity issues, they will help them gain eligibility with the Division of Welfare and Supportive Services. Additionally, the Division of Welfare and Supportive Services has programs that provide transportation services to food insecure households. Through the NEON and SNAP ET programs, participants, including parents of minors, can receive various types of transportation assistance, including gas reimbursement, bus passes, and reimbursement for car repairs, car registration, driver's license, and car insurance. With me here today, we also have other representatives from each of the divisions if you are interested in some additional information or have further questions.
Thank you, Ms. Reynolds. Do any committee members have any questions?
Governor, just a quick one, if I may. Less of a question,
Sure.
but a comment. The way that your division constantly takes audit recommendations and looks for ways to kind of keep going on the same logical path as opposed to just answering the questions put in front of you or the task put in front of you is exemplary. And I wish that every agency did the same thing, right? Took kind of the direction and then just ran with it. So thank you. I think the layering of those services is so vitally important. And we know based on how the federal money comes in that sometimes you can't get it from one bucket, but you can get it from another bucket. And it really does seem like you're paying attention to all the buckets. So thank you.
I have a question, if I may.
Sure.
Dina Babsky, I just would like to get clarification. The 211 portal or Nevada 211, is that a online portal or is that you dial it on the phone?
So this is Jeff Duncan for the record, agency manager, Age and Disability Services. It is a phone portal and an online option as well.
Okay, all right, thank you.
24/7 for the phone and website 24/7 as well.
Any other questions by any committee member? So Governor Lombardo for the record. So Ms. Ortiz, I don't know if you're best situated to answer this question, but on recommendation number 1, last paragraph, auditor comment, you were going to reevaluate the billing model and the possibility of per member per month rate as a deliverable in the 6-month status report. Is that with the contract expiring 2 years from now, is that something that could be implemented if the report tells you, yeah, let's go that way, that direction, that we ended up waiting 1.5 years to make adjustments? Is that correct? Am I reading that right?
Good afternoon, Stacy. This is Stacy Weeks from the Division of Healthcare Financing and Policy. Good afternoon, Governor. That is a good question because of the current contract that we are under. Our goal at this point is to implement a PMPM and also hire an actuary. Unfortunately, it was an oversight on our part, and I want to own that last session that we did not have this in our budget. For the next session, we will be seeking funding to have an actuary in place and to also start using an actuary when we set rates. In the meantime, we are looking at their cost reports, and so we are using our audit team to audit them, and we should have by the end of next month more information to actually, I think, set a PMPM that we at least feel that we understand from a cost perspective. I think that might be the best that we can do at this time, but if we do get the funding next session, you know, we would want to move forward with actually using an actuary to look at what their costs are and also looking at adjustments to make sure that the spending is going to enrollees and not being pocketed for profits. So I hope that answers your question.
Absolutely. Thank you very much. All right. Any further questions? All right. Hearing none, it's informational only item. We will close item number 6. Thank you, everybody, for your participation and answers to the questions presented. And we will move to agenda item number 7, approval of the annual audit plan pursuant to NRS 3538.038 for action. Will that be you, Mr. Lohman?
Yes, Governor. Thank you very much. Warren Lohman for the record. Tab 7 is the audit plan for fiscal year 2024 that we're requesting approval from the committee. The additional audits that we've identified are annotated in red with, at least in the one case of the Charter School Authority, an anticipated estimated presentation date of approximately a year from now. The other two are on our list. They are requests, and we will certainly get to them as quickly as possible. The other audits attempted to broaden the description just a little bit to give more explanation of what we would anticipate auditing when we went in there. Of course, that expectation could change, be modified, what have you, but in general, that's the direction that we would go. So with that, I would ask the committee if they have any questions and to approve the audit plan.
All right, do we have any questions from any committee members? Treasurer Conine, any questions?
No questions, sir, but I'd make a motion if there aren't any questions.
Let's confirm, General Ford, are you still on the line?
Yes, I'm here. I have no questions.
Okay, I just wanted to make sure you were still there. Thank you. We have a motion on the table. I'll entertain a second.
I'll second the motion.
All right. With all those in favor of the annual audit plan pursuant to the NRS 353A, signify by saying aye.
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 Any against? Hearing none, motion passes. Thank you, Treasurer Conine, for the motion. So we will close agenda item number 7, move to agenda item number 8, approval of the annual report pursuant to NRS 353A.065 for action. Mr. Lohman.
Thank you, Governor. Warren Lohman for the record. We are asking for the committee's approval of the 2023 annual report. I would just note the performance measures for the 3 sections of the Division of Internal Audits. Ask you to look at page 10, and you'll see the 2 performance measures for the internal audit section. In fiscal year 2023, the dollar benefit for each dollar spent on internal audits was a return of $104. We would expect that number to decrease a little bit in the coming year. We're losing a couple of high dollar recommendations off of our list, and we have more filled some staff positions, so the bang to buck is going to come down just a little bit. And then the percentage of recommendations fully implemented stands at 93, and I would add that that does not include those recommendations that were deemed to be no longer applicable. If you turn to page 13, you will see the performance measure on the compliance review section. Very proud of the work that they do. The percentage of recommendations implemented from the compliance reviews is at 100% for this year. And as we've discussed previously, Governor, many times the results of the compliance review lead the way into internal audits that we then conduct. And the last performance item for the financial management section, I would ask you to turn to page 17, and you'll see that the performance measure is on the percent increase in trainees. Overall test scores, that sits at 22% increase, just a tad below what we would project, but we're especially pleased that we've been able to initiate internal controls training again after the COVID period and the Smart 21 deviations, et cetera. And so we're very happy with what that section is doing. If the committee has no questions, I would ask for your approval on the annual report.
Do we have any questions from any committee members on the annual report?
Governor,
So,
if I could, I've got one quick one. Or, sorry, General Ford, did I hear you?
No, go ahead.
Okay. Warren, on page 10, the the summary of the internal audit performance measures. Mr. Lohman, apologies. I've noticed you've kept the projected at $70 for every dollar spent on internal audit for the third year. You're exceeding that pretty substantially. Are we sandbagging here? Should we boost that up a bit?
We can certainly look at the appropriateness of that number and if it should be modified. And I would take some counsel from the director of GFO and others on that.
Thank you.
Would we, in reference to the treasurer's question, who's going to pursue that recommendation?
Governor Warren Lohman, for the record, I will pursue that inquiry and make a recommendation up through the GFO for adjusting that number.
Thank you. There might be some other state GFOs that we can probably pull some measurement matrix from. And then for the record, Governor Lombardo, on page 13, Mr. Lohman, the graph that you alluded to, performance measure, percentage of recommendations implemented. Are you with me?
Yes, Governor.
So actual is 100 in the previous 2 fiscal years.
Yes, Governor.
Is that exceptional? I mean, is that something that needs to be awarded? What's the deal with it? That sounds fantastic.
Thank you, Governor. Offhand, I would agree with you. It's really good. I would characterize these are recommendations going out to agencies on compliance with primarily the state administrative manual and result from the self-assessment questionnaire that's required every biennium. So the recommendations are solidly based, and there's really no need for an agency not to accept a compliance review recommendation. That doesn't mean it hasn't happened, but there's really very little wiggle room based on the criteria that we're using. And this might be another number to follow the treasurer's recommendations to take a look at adjusting.
I don't know. I mean, just in my experience through history, I've encountered numerous people that are never supportive of an audit committee's recommendation. So I think that needs to be commended. All right, any other questions of the annual report by any committee members? And this is an action item. I will entertain a motion.
Controller Matthews, I will move for, oh, sorry, Attorney General Ford, was that you?
That's fine, yes, I was just gonna move approval.
Go ahead.
And
So moved.
I'll second.
we have a first and second. All those in favor signify by saying aye.
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 Any against signify by nay. Hearing none, motion passes. We will close agenda item number 8. Move to 9, status of outstanding audit recommendations, informational only item. Mr. Lohman.
Thank you, Governor Warren Lohman, for the record. This is a summary of our outstanding recommendations as of the end of the fiscal year. There are several on here that go back a ways, and there is a good reason for why they're still there. As an example, 1605, the very first one, on collections from the controller's office. That recommendation was to automate debt assignment. When we made the recommendation, Smart 21 was in the works, and that was going to be the mechanism by which the controller's office could achieve that. We know that there's been a shift there, and that is now dependent on the core Nevada project. So once all of that happens, then we would expect that to be fully implemented. I will add that when the committee sees this report next year, I'm going to add a column and give a detailed summary of what each of the recommendations is. But in general, it's a matter of waiting for regulations to be approved or budget to do some IT work, that sort of thing.
Is that it, Mr. Loman?
Yes, Governor, thank you.
All right, that's an informational only item. Are there any questions of Mr. Loman from any committee members? All right, I appreciate your comment on the updating of the matrix to be a little more descriptive. And hearing no questions, we will close agenda item number 9 and move to 10, estimated benefits for Nevadans from audit recommendations, informational only. Mr. Loman.
Thank you, Governor. Warren Loman for the record. This report, the benefits to Nevadans, is a result of fully implemented recommendations. This is a snapshot over time over the last 3 years. We follow fully implemented recommendations with $1 benefit to Nevadans for 9 years. The point being, these are recommendations for Nevadans and benefit Nevadans. So in some cases, it's the amount of money that a recommendation would bring into the state. They're not necessarily hard dollars into the general fund, but it's what leads us to our performance measure, which is shown on page 7 of 7. Thank you, Governor.
So for the record, Governor Lombardo, Mr. Loman, in our pre-meeting, you're going to have to help me walk me through it. I can't recall why I asked you to update on this graph. Has that been done, and what particular item was it? Do you recall?
Governor, the update that you were asking about was on the audit plan and the detail that was in that. So you and the committee members would have more knowledge about what you were asking to approve. You had questions about how the report itself was laid out and why did it show the last 3 years. And as we discussed at the time, it's just a snapshot in time, and this shows over the last 3 years those that we're tracking, and with that you would be able to see new ones that came on or those that were falling off or ready to fall off.
All right. Yeah, I recall that from the previous item, but on this particular item, I think I see what the issue was. If you go to page 1 of 7, and you usually identify the audit for each one of these years, and then you do the total of identified dollar benefit. In fiscal year 21, there's no items listed. I think that was the issue.
Yes, Governor, that's because the recommendations from fiscal year 21 that had $1 benefit attached to them had not yet been fully implemented, and we only take a benefit once it has been fully implemented. And more precise, we don't take the benefit until the next full fiscal year. So, for example...
I understand.
Okay. Thank you, Governor.
I understand. So I think the other issue was, well, even though we haven't received the benefit, what is the actual item we're measuring? Because you have a total of $93,600,000 listed there. So the request was maybe identify what is the outstanding audit.
Understand, Governor.
Do you understand?
Understand it.
Yeah, I think that would be a benefit to all the committee members, and maybe we can opine on why is it taking so long, and answer those type of questions moving forward. So if you wouldn't mind doing those recommendations into the next report when presented.
Absolutely, will do, Governor.
All right, any other questions from any committee members? All right, hearing none, we will close agenda item number 9 and move to 10, estimated benefits. Oh, no, wait, I'm sorry. Close agenda item number 10 and move to 11. Presentation of divisions, internal assessment, and external validation pursuant to 453A for 5.9 and the 2A standard 1312, informational only. Items 11A and B, external assessment and internal assessment. Mr. Lohman.
Thank you, Governor. As required by the standards of the Institute of Internal Audits, we do an internal assessment with an external validation every 5 years. For the past couple of cycles, we've been a little over the 5-year period. Joining me at the table is Mr. Steve Weinberger, CPA, who did the external validation under the auspices of the Institute of Internal Auditors. And essentially, our internal assessment noted there were some policies and procedures that needed to be updated. We knew this was coming. I'll also add for the committee, we are in the process of fielding the Teammate Plus automated audit management system. So once that's fully fielded, we're going to have to update policies and procedures that take that into account. Mr. Weinberger then came in several weeks ago and did the independent validation of our results, noted a couple of recommendations and comments that he had. I'm pleased to say that we achieved a generally complies with standards evaluation, which is the highest that we could achieve. Mr. Weinberger is here to answer any questions the committee may have about what he saw, what he found, but we're very pleased and are already planning for what happens in 5 years from now when we need to go through this process again.
All right, do any committee members have any questions of Mr. Weinberger? So I don't have a question of Mr. Weinberger. I have a question of you, Mr. Lohman. So there's several recommendations on each particular fiscal year. And you're in agreement with the recommendations? Is that what I'm hearing? Because you said it was an outstanding evaluation?
Yes, Governor. As noted, the recommendations didn't affect the assessment of the generally complies level, and we've already moved to implement several of the recommendations to include on the audit plan to be more specific in the origination of an audit. If it was a risk, what was the risk basis? Was it our documented risk assessment, or was it as a result of an ongoing audit, or was it a result of a fraud hotline call that we have? So we've implemented that one, and we've got some checklists to update, and my intent is to establish a task force in the spring, summer timeframe to update policies and procedures, look at implementing these recommendations, and by that time we should have fully fielded the teammate system and to bring all of our policies and procedures up to date.
Thank you for that. Mr. Weinberger, do you have any color to provide?
Thank you for the question and opportunity to speak, Governor. But no, I think Administrator Lohman explained the process and it accurately explained the conclusions I had in the report.
All right, well, thank you. I think the report was very well done as a matter of record, and I appreciate your effort. Any other questions of Mr. Weinberger or Lohman, Mr. Lohman from committee members? All right, hearing none, we will close agenda item number 11, move to item number 12, committee members' comments. Do we have any comments from any committee members?
Governor, this is Treasurer Conan. You can't see the rest of the room, but a lot of the executive branch audit team is in the room, so I just wanted to take a moment and thank them for all their work and their commitment to getting to 110% next year, which is great.
What is your recommendation on the threshold on return on the dollar?
I mean, it's good. It's not treasury good, but it's good.
It's per dollar, it's not in totality. Come on. All right, is that the only comment from any committee member? All right, we will close agenda item number 12 and move to the second opportunity for public comment under agenda item number 13. I will not repeat the introduction. Keep your comments to 3 minutes if able, and the phone number is listed on the announcement, so I will not repeat. Do we have any public comment there in Carson City?
No, Governor, and we don't have anything on the phone either.
Do we have any comment here today in Las Vegas? We had one sole observer and she doesn't want to make a comment.
It was very interesting.
She said it was very interesting.
That's a comment.
All right, we will close the second opportunity for public comment and move for adjournment. So moved. Thank you, everybody. I appreciate your time.
Thank you.
Ford, did you hear? Mr.
Yep,
Ford?
I heard it. Thanks so much.
Okay, you heard the adjournment. Thank you.
Yes, sir. All right, bye-bye.